Hey guys, it's BlockchainBrad, and today we're talking about all things universal because we're talking about the universal protocol. To do this, we have one of the key members of the team. His name is JuanPablo Thieriot. Juan, thank you very much for being on the channel today.
Thank you for having me.
Not a problem, mate. Now, you have a key role in this, but let's start with the fundamentals of the universal protocol itself. What is it in terms of specifically the alliance? How can you be an alliance specifically and bring all this together? Tell us what you're about.
Sure. So the Alliance is a bunch of companies that are sort of early blockchain companies, each specializing in a different field. So it's Uphold. It's a company called Cred that specializes in credit. It's Blockchain at Berkeley, which is the largest U.S. university blockchain group, 700 applicants a year, rigorous interview process, down to 50 talented people. Brave, which is Brendan Eich's company, aiming to change the way we interact with the internet. FBG, a bunch of companies that each specialize in different realms, and our sort of collective view, our aligned viewpoint is that there are some restraints on the growth of distributed ledger or blockchain. One of them is the lack of a common language. Today, it's a sort of primordial soup of competing protocols that, despite people recognizing that this is a revolution of sorts, there isn't yet an easy entry point. It's this sort of, again, primordial soup of competing protocols. Secondly, there's not the conventional user safeguards that the mass market has come to associate with more mature asset classes. So, the notion of private keys and losing them and losing your money alienates, I think, a lot of people who aren't technophiles. Lastly, it's an industry that seems to be more focused on resuscitating a sort of speculative hype cycle than actually producing products that are for the mass market. So as a group, we hope to address that.
Well, let's talk about that in serious detail, because right now in the crypto space, we hear a lot about speculation. We see a lot of the speculation happening in the marketplace. But what we don't see a lot of is these kind of alliances coming together like you are doing. But there will be criticism straight away with regard to blockchain or non-blockchain, enterprise or for the people. So let's go there for a moment. By building this enterprise, how does that relate to the blockchain specifically?
Well, I think all of us are sort of crypto native companies. The way I think of blockchain or crypto is, if you look at the financial space, there's sort of, if you draw a line down the middle of a page, there's the existing incumbent system on one side, which is banks and acquirers and credit card companies and processors and so forth. And everything is based on that. PayPal, TransferWise, what have you. It's all sort of layers on top of this system that has all these participants and essentially sits on 1970s mainframe technology infrastructure. And on the right, you have the crypto native companies that have some shortcomings insofar as being able today to be able to match what's been created over the decades on the other side of the page, but those are just matters of time. So we view ourselves as definitely residing on the right. By being crypto native, it's all blockchain based. It is not necessarily dependent on or wants to participate in a five-party payment system architecture. So I was having a discussion earlier tonight, how is blockchain going to solve issues in terms of traceability in the healthcare industry, or how is it going to be applied to agriculture? Those are interesting applications of blockchain. What we're focused on is the financial sector and how blockchain enables the financial sector to free itself of the baggage that is otherwise, a heavy backpack for every participant on the other side of the page.
Right. Okay. Well, let's go into that financial sector and really explore that. So you state in your white paper, or more to the point, your website, that you are a digital substantiated reserve ecosystem. So I want to explore those terms, especially substantiated and reserve. Tell us a bit about what you mean and how that relates to this financial sector.
Sure. So So Uphold was started as a company called BitReserve, and I think the sort of founding principles were Bitcoin had solved these long-standing issues, computer science and cryptography issues that essentially meant that finance would no longer be inured, would no longer be the last industry to be torn down to the studs and rebuilt in the internet's image. But we felt that that the sort of ethos of the really early Bitcoin ecosystem, which is Bitcoin will replace the dollar as the world's reserve currency, and you heard a lot of sort of evangelical stuff about get rid of your bank accounts, pay your employees in Bitcoin,
Right.
let's start Bitcoin payment processing companies, et cetera. And while we all share the belief that this thing is revolutionary, we did not share the belief that Bitcoin of itself was much of a mass consumer value proposition.
Can you tell us, can I just stop you there for a moment and tell us why?
Yeah.
I'm sure the listeners would love to know just quickly, why does Bitcoin, in your opinion, not service the need or serve the need for enterprise, for example, in this respect?
Oh, absolutely. Because I don't think merchants were looking to add a degree of foreign exchange complexity to their day-to-day lives. In other words, getting paid in Bitcoin just adds complexity. It's volatile. It's slow. Only 24 million people in the world have ever been exposed to it. So it's not as if they're adding a giant pool of new incremental capital to purchase their goods.
Right.
So
what about the issue of KYC and AML as well, in coupled with that? Is that an issue too for identification, for tracking?
Well, on that front, I think there were a lot of people in early crypto that were hoping that there would be some end run around sort of, the KYC, OFAC screening, AML components that touch money. And I think what we're finding today, 5 or actually 10 years in, is that if it's money and it's going to be transacted in any meaningful mass market kind of a way, there's no end run around that nature of filtering. I'd argue that that actually it's a route, and I think at this point maybe the regulators have come to understand that compared to 500 euro notes and duffel bags and private aircraft, maybe digital money is actually a better way to go. It would actually enable compliance to become an issue of traffic monitoring as opposed to deputizing mid-level employees at banks and other places that are inherently conflicted, because here's a guy who's a mid-level employee and his boss wants to sign a big deal with somebody, and this guy says, oh, hey, you know what, sorry, but we can't do a deal with this guy, and I can't tell you why. That's always struck me as a not very intuitive way to police things, right? In this case, if it's anonymized, but so you're not seeing names, but you're seeing, hey, $50 million just went from Yemen to the Triple Frontier in Paraguay, that might raise a flag for somebody and they could drill down, right, in a digital context.
Right.
So,
well, in that sense, sorry to interrupt, but I want to talk now about you. Obviously, you've made it clear that the anonymity is an issue, because obviously that doesn't really bode well for enterprise and for overall financial sectors. So let's move across now once again to your substantiated reserve.
Yeah.
Why did you take this approach, and who's involved in this?
Yeah, so our notion was that in order to become transactional, really what needed to happen was that what people regard as money, their home currency, needed to sit on top of crypto rails. So I think the previous iteration of Uphold, which was BitReserve, was the first company to put dollars, pounds, euros, etc., on crypto rails, meaning you could give a Bitcoin address, but it would be associated to your dollar wallet inside of Uphold. Somebody would send Bitcoin, it would be translated to dollars, and it would show up in your account seamlessly, right? That theoretically would be useful to merchants around the world who aren't necessarily wanting to speculate in something called Bitcoin. So we set that up many years ago. It's evolved very nicely. I think there's lots of use cases that have sort of proved the point that it's useful to people. It's a better alternative to the correspondent banking, SWIFT, wire transfers, sort of a system. I think it's very early innings. There's lots of further applications of it.
Mm-hmm.
But that was the notion. Basically, put people's money, that thing that doesn't change in value from one week to the next, on top of these new rails that, again, are in no way dependent on the legacy architecture.
Right. Well, clearly from the reading, you want to be what I've deemed a crypto coalition through this alliance you call the UP or UP alliance. But I really want to talk to you about the token for a moment, because often we see startups that emerge where they don't need a token. And I was wondering, in your situation, can you please explain to us why you need to have a token, or if in fact you are going to establish a token for this alliance? Talk us through the plan.
Yeah, sure. So it's one token that is the sort of heart of the ICO we're doing, but actually it's sort of a family of tokens that we refer to as universal tokens. And
Right.
And so they're, UPUSD, UPBTC, UPXRP, and whatever else. The notion is that the purpose of the alliance, again, is to remove the restraints on the industry. Lack of a common language is a big one. So if you take, let's go with UPBTC, we put an ERC20 wrapper with a lot of sort of new characteristics built into it that are meant to be aimed at the mass market. Conventional safeguards like you lose your private key, it's recoverable, it's inheritable, it's set up to be easily used as collateral, to be insurable, reinsurable, etc. And what that means is that the day we do that, BTC can be reasoned with for the first time by the preponderance of smart contracts and decentralized exchanges and apps that exist within Ethereum. And that would be true for XRP or anything else we decided to wrap in this sort of detachable wallet architecture that we've come up with. Really what it is, in a very general sense, is the marrying of our reserve management capabilities with the critical mass of functionality that Ethereum has
Right.
has
So fundamentally, it's this wrapping feature that you are going to wrap ERC20 first. Are you going to also move out into other native platforms where you can wrap others?
Oh yeah, no. The idea is we will launch one token, one or two tokens a month actually, and the ones we know we're doing is we're doing a dollar stablecoin UPUSD in November. We'll launch UPBTC in December. The home token, which is UPT, will launch in January or late December. And again, the idea is that the interplay on this platform is such that it enables this sort of interoperability. But the functioning of the home token, as it were, is that in many contexts, the staking of it garners you the maximum economics possible in a number of different scenarios: conversion, seeking yield, looking for credit, etc. So as an example, in launching the US dollar stablecoin, which is an increasingly crowded market, the point is that it's there to, if in the context of Uphold, and this could be true for other exchanges who decide to sign on, let's say you have dollars with us and you would like to get some yield. It's a time-bound product, 3 months, 6 months, 9, a year, 2 years. The baseline rate for naked dollars would be 2%. If you decided to turn those dollars into UPUSD, you'd immediately get a 50% benefit, and the baseline would be 3%. If in addition you decided to stake the UPT token itself up to 10% of the transaction size that you're contemplating, I want yield on $100,000, or I want credit of $100,000, that would get you the maximum economics. So in the case of yield, it would take you from 2 to say a maximum of 5%. And in the case of borrowing, it would take you from a baseline of 15% down to about 8%.
Right.
So that's the intent. It's utility. It's really, truly uh, the simplest kind of utility that has appeal to everybody with a bank account in the world. That's the way it's meant to function.
Right. And what about growth potential of the alliance itself? Obviously, you have a certain number now, and they are fundamental to the start of your project, but are you planning on expanding the UP alliance over time?
Yeah, absolutely. So we're in discussions. So let me back it up. If you look at each of the members today, they're each what we hope to describe as sort of best of category providers of a very specific attribute. So Cred, our partners at Cred, which was previously Libra.
Yes.
The guy I work with every day is a guy named Dan Schacht. He's the ex-head of innovation and mobile at PayPal. His
Yes,
colleague,
I've met him
yeah,
before.
well, he's a wonderful guy. And his colleague Lou Hua, who had been with him at PayPal after running PayPal Asia, started basically an ecosystem of some 30 million gamers in Asia to whom he loaned unsecured credit in the gaming context. So they've got years and years and years of lending experience that they're bringing to bear, and that's all they do. In the context of blockchain at Berkeley, again, largest university blockchain group, 700 applicants a year, whittled down to 50 incredibly talented people that can do coding, research, etc., that we can apply to building out and sustaining this platform over time. In the case of Brave, Brendan Eich, you could argue, if not the world's preeminent technologist, and certainly among the top couple. Obviously, a specialist in matters of privacy and security. And with FBG, we have a partner who is a fairly storied trader in the crypto space, has been wildly successful, and has established quite a brand for itself. The people we're looking to add, custody is an interesting issue. UPP's model, economic model, isn't based on any kind of proprietary custody. So the notion is, in this kind of interesting, very rapidly evolving part of our industry where regulatory components are coming into play, what is a qualified custodian in the security token context?
Right. A big question right now, a very big question right now.
And a very new thing. And so what's interesting is, well, so what's the regulator's criteria? Is it the most cutting edge technology, or is it the guys that have the right regulatory status? Because those two things might not be, the same at the moment. So,
sure. Well, let's talk about some names of interest to you in that respect with custodians as well. Sure. We hear a lot about, for example, I think it's BitGo. I think that's a really common, well-known one, very respected. Have you sort of evaluated different types of custodians, and have you decided on any for the future?
Oh, yeah. No, so BitGo, we're in discussions with BitGo. We're in discussions with Ledger, with Anchor Labs, with Kingdom Trust, with Prime Trust, with all kinds of them. And what's interesting is they all have different attributes. And so at the end of the day, it might come down to certain types of tokens. Security tokens would be best custodied with this partner, and virtual currencies would be best custodied with this partner, and so on. And I think, in terms of, the push to decentralization, diversifying across a number of them might end up being the right solution, but we're in deep dialogue.
Well, one thing's for sure, I want to pull back on this comment you made about the team, because really, to be fair, the members of this alliance that you're talking about, they are, for one, I really don't like to sort of use these terminologies, but it is AAA standard. I mean, you're talking with Brave, you're talking with Berkeley, you're talking with pretty respected groups of people. How did you secure those, and how did you forge this alliance to have this kind of standard? And would you argue that you're also part of that AAA standard because of this alliance you created?
Well, that last one, it's nice of you to to associate us that way. I assume that the reason we've been able to pull it together is that we're really like-minded insofar as what we collectively perceive to be the things holding the industry back, and can sort of collectively articulate how we feel those things might start to be resolved. Really nothing more than that. Well, I will say this. We have a history of working closely with them. So in the context of a Brave, or so, the familiarity between them and our development group, it's very intimate. We've developed a lot of products together. So I think we have that level of trust, at literally a level of coding, where everybody respects each other's talent, and
right. Well, let's talk about what is always on everyone's mind. That is the token in terms of the metrics. Let's talk about the tokenomics for a moment. What's the plan in terms of the investability? If we make coin that term for a moment, obviously you're moving into the utility domain, but people at the start don't see it that way. So how are people going to be able to interact as investors as they move to support you?
Well, so are you asking in the context of the ICO, or are you asking
Yes,
in terms of
definitely the ICO. I mean, I wanted to get the information from you. Are you doing an ICO? What is the token plan?
Sure. So, all right. So we're doing an ICO. It's in a pre-sale phase. We expect to move that into the public sale phase at some point, probably in early to mid December. The specifications, if you will, is it's an issuance of 10 billion tokens.
Mm-hmm.
Yeah, we're going to price it at the pre-sale at 1 penny, which gives it an implied market cap of about 100 million.
Okay, so I'm going to stop you for a sec. You're going to get criticized in this bear market with a kind of valuation like that. So how can you justify a valuation that is 100 million?
Because I think the revenue model is a powerful one, and so far as what should be the criteria for somebody to invest in something, the team is about as good as it gets, and I think the revenue model is not some sort of stretch case utility. It's pretty simple stuff. Everybody in the world wants cheaper credit and higher yields. Everybody wants interoperability. And I think we're able to deliver it in a scaled way today. This isn't a question of an ICO where we're going to build something or it's a concept. The stuff is built. Right now it's going through, we're doing a double security audit on the code.
And we're going to talk about the tech. We'll definitely get to the tech, so don't worry about that. But let's go back to the tokenomics as well.
It makes me think I should get somebody with a...
Don't worry, we'll also have other interviews in the future as well, Juan. But let's go back to the numbers, because we go with 100 mil. So you've explained why you think that you're of value. You explained there's a real use case. You've got the tech. But now let's break it down. Let's talk about how you've discerned who has what. You've done a seed, I'd imagine, a seed round or a cornerstone. Talk us through the different rounds that are planned. How much? What are the lockups? Give us everything.
Sure. Yeah, absolutely. So no, there's no seed to speak of. The money spent on getting this to where it is has been spent by members of the alliance, so Uphold and Cred and so forth. What we're raising is 28 million in the context of the ICO. We've raised about 10 of that so far. Again, we think we'll be able to wrap it up by late November. And then we will hand it off to a partner to deal with the public sale part of it, which they will decide to keep open for whatever it is they think is appropriate, a week or 2 weeks, who knows. The cool parts of it are, insofar as the income to the alliance, it's always in UPT. So if we were able to somehow pay all our expenses in UPT, you'd have the first real-time self-auditing company. As it is, we have half of a self-auditing company. Everybody will be able to see in real time what the revenues into the company are. The uses of the funds into the company are only threefold: build out, maintenance of the platform, and then buying back its own token. it can buy back its token, which starts with a float of 10 billion to a floor of 100 million. And after that point, like with a lot of these new fun ideas, it actually metamorphosizes from, you know, a piece of industry infrastructure into an NGO, because at that point, any profitability or income goes to environmental NGOs. The notion being that that just today in this early stages of our industry, Bitcoin is consuming more electricity than the continent, than the country of Australia, and there's
That's
already
my
been some.
country.
It
That's a
is.
lot. That's a lot of electricity.
It is. And what it tells you is if our industry really is going to subsume the legacy financial industry, it's a very scary thing from the point of view of global warming and energy consumption. And
Right.
so we figured the most logical place to direct that flow would be there.
Okay, so you want to be greener, but I'm going to pull you back to the tokenomics again. Let's talk about the lockups as well. I want to know whether or not you've got a team lockup, how long that is, how long is the lockup for the strategic investors. Talk us through that.
Yeah, absolutely. So the lockup for any purchasers of the token, either in the context of the pre-sale or the public sale, is 40, 60, 90. And that is essentially our lawyer's colorable view that we are checking the box with Reg S and Reg D stipulations in the United States. Obviously, those things were not written with tokens in mind. It was equity and debt. So it's a supportable interpretation.
Right.
The notion is that it's a third, a third, a third. So you buy 99 tokens, 33 of them become freely saleable at 40 days. The next 33 at
33%, you mean?
Yeah, yeah, exactly.
Okay, that makes a lot of sense now. So I want to talk about this. You haven't given much time for those who are in that strategic round to be able to dump. And I do want to get to that point right now, because we've seen in the past some strategic investors, particularly those in the crypto space, you know, allegedly being the good actors, and VCs have been behaving badly, quite frankly. So how do you stop that kind of dumping action from potentially happening? And is the team lockup different as well? So let's talk about those two things.
Yeah, that's a good point. So the team lockup, God, and I'm going to try to recall, but I think it's significantly more onerous than that. I want to say.
I would imagine so, and I would hope so.
Yeah, it is. What it is I think for people that have not paid for their tokens, which is to say the team,
right?
I believe it's 3 years ratable monthly, which means I'm not going to remember off the top of my head, but I want to say that they're able to sell 2% of their holdings every month over the course of 3 years, no more than that.
Okay, that's interesting because it allows them to survive and utilize the token however they want, but it's certainly regulated by the core team. But now we'll go back to the dumping risk. How do you, because it's such a short term, really, your maximum period of time is 90 days, that's 3 months, you know, they could react very quickly to this.
They could, and I think so hopefully FBG is the partner that is the sort of liquidity partner in the alliance, and insofar as, you know, OTC and market making activity and exchange listing and so forth, they've really taken the lead, and I think they're very cognizant of the perils of placing in a pre-sale context your token with the wrong party that ends up being a flipper.
Right, and I think also it's also incumbent on all of the investors, all the people who are literally putting their money into you, to really pull these guys into account, all these VCs. So I'm glad you mentioned FBG, because essentially it's about knowing who they are so that we can monitor also the conduct of the people we're entrusting to represent you as well.
Absolutely, and then the nice part about the way this all functions is we have, you know, perfect transparency into how people behave, unlike, say, a stock market context where it might not quite be so clear.
Right. And with your experience, let's go there for one moment, since you mentioned it. Do you see this kind of problem that we see currently with the dumping, with the misconduct we often hear about, or is it typical in every financial market, including in this Wall Street?
Oh boy, that's a sort of philosophical question.
Well, not really. I mean, at the end of the day, there's evidence based on behavior. And so is it something that's prevalent just generically, or
Uh,
generally speaking?
Yeah, look, the reason I say it's a philosophical question is, um, if the subject matter is financial, then I think the sort of guiding principle is that people will do whatever they feel they can get away with,
Right.
and that might be even people who are acting in pursuit of short-term gain at the expense of their long-term gain. That's probably the predisposition, and this is a new market. I think the regulators are actually sort of pointing out that, hey, Jesus,
Mm.
we've
And actually bring some transparency and light to the system.
well, we've certainly been emphasizing transparency above all else, right? Above decentralization, above everything. Transparency is really the key.
Right.
But it has been interesting. There was a review, I suppose, of the top exchanges by some U.S. regulators the other day, and they pointed out that, geez, all these old evils of the equity markets, wash trading and front running and free riding and withhold, all these things for which there's years and years of regulation around. This new thing has been invented, and what are the first evils that jump into it? The things that were
Right.
fixed. So unfortunately for them, it's like, oh, geez, dad's got to come to town and teach a lesson. So if your question is, do I think there's a new market where the participants will restrain themselves from those sorts of activities? No, I don't. I think, unfortunately, when it's a global multinational context and people can get away with a quick profit, the human behavior will dictate that that's what they'll do.
Right.
And we can either regulate ourselves and operate with integrity, or unfortunately the regulators will come in and do that for us.
Absolutely. Well, let's now talk about, I want to move to the conversation of the lingua franca, this common language that you're establishing. Can we talk about that in a technological sense, just briefly? Talk us through what's involved and how it works and interoperates, because the buzzword in blockchain is interoperability. This is your core tenet. Talk us through it.
Sure. So the notion is that the day that we wrap a Bitcoin in our ERC20 wrapper is, the day that all the decentralized exchanges can basically deal with Bitcoin, which means that if you look at it the other way around, from Bitcoin's point of view, it is the first time that Bitcoin can be reasoned with by all the smart contracts and other decentralized applications inside the Ethereum network. You would think that from a market point of view, ETH BTC would be the probably most desired interaction, and it's sort of surprising that none of these decentralized exchanges can perform that in a particularly scalable or transparent way, or a way that isn't apt to lose people a lot of money.
Right.
So,
and is that patented tech? Is that your own technology that you are closed sourcing and not going to open to the public, or what's the plan there?
No, I wouldn't look at it as necessarily being patented. What it is we've been operating a particularly complex reserve for 4 years, and so it's really marrying that to the edges of where Ethereum has gotten with again all of its achievements. And really, to give credit where it's due, it was the observation of Howard Wu at Blockchain at Berkeley that this would be an amazing combination. And again, not just applicable to Bitcoin, but really anything else. Imagine, almost as interesting as Bitcoin, imagine XRP, which has sort of existed at the fringes of the core of distributed ledger, of blockchain. It's been perceived as some other thing that is a replacement for Swift and something to be sold to banks. For XRP to be reasoned with all the smart contracts in the world, you would think that would be particularly interesting to them. And again, most importantly, if you're observing this from the outside, it takes away a little bit of the doubt around, well, what should we do if we believe this thing is permanent and for real, and we're going to rejigger our company's business logic. We can go ahead and now do it with Ethereum, hire a Solidity developer, because Ethereum, it turns out, can now reason with EOS and Monero and
right.
Bcash and XRP and all these other things that to a lay outsider would appear to be, on the same level.
Well, let's talk about the EEA as one example, or the R3. Now, there are different alliances that have emerged for different reasons. Some have banking agenda, some have just the Ethereum agenda within the EEA. So how do you sit in context with those as a consortium, as something that really wants to establish some sort of interconnection for interoperability?
Well, it is true now that you put it that way, and I hadn't thought of it. Consortia tend not to be hotbeds of innovation. On the contrary, but consortia also probably tend to be associations of sort of fat cat incumbents. And in this case, that's not the way we perceive ourselves, right? I think
Right.
all of us are sort of scrappy upstarts with a lot of original ideas, bringing again sort of pure play capabilities to merge together, each one being very different. Again, credit, value substantiation, talent, sort of aftermarket trading capabilities, custody, what have you. But all in this new field, and all it's not in a vacuum, right? We're even within our market. You've got some behemoths that have emerged. You've got Coinbase at $8 billion backed by, whoever it was, Tiger Funds, and you have Circle, which is an appendage of Goldman Sachs. So we are not that. We are something else, trying to, put together a platform that moves the industry forward, and most importantly, makes it jump from the 24 million people that know it today to 2.5 billion holders of bank accounts.
Right. So you are true custodians of that concept of mass adoption. You really want to lead that as one of those sort of true proponents of decentralized finance.
Absolutely. If we don't accomplish mass adoption, it's also a funny thing, right? Because mass adoption, the digitization of all financial assets is inevitable. It's absolutely inexorable. But in terms of the shorter term expectations of every single current participant in the ecosystem, what they really want is for the accelerated mass adoption of digital assets. If it happens over time and all these things peter out, then I don't know that the current participants will be perceiving a reward for their brave early bet, right? It has to happen on some kind of a time frame. It can't just be that 50 years from now the banknote dollar won't exist and it'll be digital. That's too long a time frame.
Right. Well, you mentioned time. Let's talk about that in context with the roadmap as well, Juan. What's the plan for you to roll out right now? You mentioned that your tech, the protocol itself, is ready to go, and you roll out. What does that mean in terms of business, in terms of potential to actually have use and application and starting to evidence that?
Yeah. So our expectation is that there'll be significant uptake, just given the fact that, again, we're uniting all these separate pieces that are sort of leaders in their field. It's a built-in starting audience. So I don't know how to put it to you in dollar terms. I would suggest that when we launch these stablecoin, the UPUSD, I would be shocked if we were at under, $50 million after 3 months and probably $100 million after 6 months.
Can you tell us why, though? Why do you feel that, given all the connections, all the knowledge you have the potential and the partners, everything that's set up? Talk us through the why.
Yeah, that's really a consequence of the fiat currencies that we have on deposit today that aren't gaining any kind of a yield, and but clearly have jumped over into thinking that we're a secure enough place to keep those dollars, which is the big challenge, right? Because
Right.
if you're mom and pop keeping money with the bank on the corner, then the big challenge is taking it out of there and putting it into some scary internet thing. The money we already have on deposit has already made that leap, but they're not getting paid anything, right? So we can assume that some important percentage of that's already made the hard decision to jump into this brave new world will likely want to derive some benefit from it. So it's a percentage of that. It's a percentage of our partners' ecosystems. Cred has a, whatever it is, 99,000 person Telegram community. They've secured a 300 million line of credit to put out in the world. So basically, taking conservative estimates, we feel that that's a reasonable trajectory.
Right. So given those partners you mentioned, I want to really allow the viewer to understand the value of each of these members. So let's talk about Cred for a moment. You just said 300 million. So are you saying that you've got a pool of funds accessible through that connection with Cred to really build what you're doing?
Yeah. So Cred has secured 300 million in a line of credit, which allows them to lend against BTC, ETH, and XRP in different proportions. With slightly different terms for each of them. So with BTC, it's a 50% loan to value. With ETH, I believe it's a 35% loan to value, and with XRP, it's a 40% loan to value.
Right.
But the most important component is that collectively we're able to put into the market the first non-term credit in the space. So others have been lending for a while in the context of margin credit to allow people to take margin or to short. This is not trading related credit. It is consumer related credit, and it's non-term. So, if you think of the friendliest credit in the world, aside from a friends and family loan, it's probably the American home equity line of credit. But the issue is you have to be a rich American to be able to qualify. You have to have a house in the United States, and then you can get this very friendly line.
Well, not anymore. So you have a non-term system, but how do you get that information to the world? Because obviously the crypto space is small. And for the most part, most people are engaging within that system right now, particularly in the bear market. How are you going to get the word out? How are you going to expand this to create that critical mass, to really be that tipping point where you flood in, the people flood in, and you have this mass adoption phenomenon take force? What's the strategy to make that happen? It's one thing to have this amazing product and these services, but it's another to be known.
Yeah, it's true, and that's a marketing challenge. It's a PR challenge. I would say that interestingly, in all those all that talent we've amassed at the level of the alliance, a particular marketing talent we have not amassed. So
that is true.
I wish I had a magic bullet answer for you, but other than putting out really innovative, really high quality products and doing what we can, if one of your listeners comes to me with a silver bullet answer, we're all ears.
Well, likewise, I'd like to hear it as well, but it's good to know that you're aware of the imperatives of it. So let's now talk about again, we'll go back to the proxy system that you have in the white paper. You have what you've deemed as multiple assets or proxy assets. Talk us through those different assets and how you're going to address them.
Right. So the notion is the best analogy is that of the gold-backed dollar, right? So you have these two things that are juxtaposed that are sort of opposing forces. You want security, profound security, which in its extreme today in the context of crypto means keeping something offline, in a cement bunker, air gapped, etc., which renders essentially totally non-transactional, right? And on the other hand, you have something that's in a hot wallet or what have you, and it becomes more compromised from a security point of view.
Right.
So the notion with using the proxy or universal token system that we're proposing is that both things are in play. And like a gold-backed dollar, where you have the security that the unit of account that's represented on this piece of paper is a valid one, the fact is that piece of paper can be burned, it can be lost, it can be stolen. And in that gold-backed dollar context, should that happen, nobody could have gone back to, for the sake of argument, although it wasn't, Fort Knox and say, hey, I lost my $100 bill. Could I please,
Right.
have representative gold underneath? In this case, you can. We've made it recoverable in a multi-sig context. We're hoping that a big three accounting firm will be that third constituent to the signature, which should go a long way again. So, oh, there's a brand I recognize who's involved, and should I lose my private key? So the notion is you're getting the most out of the underlying security, and at the same time, you are adhering to the inherent benefits of our ecosystem, which is to make it transactional from mobile devices at 2 a.m. on a Saturday morning without having to call another human being, and sending it, irrespective of international boundaries, wherever you like, other than OFAC countries, of course. But the point is, you're getting the best of both worlds.
Absolutely. So you're not precluded to transact at any point. You're in complete control. And, at the end of the day, like you said, it's global, it's immutable, it's unstoppable. But let's talk about those industries, because you're very specific in your white paper about the industries that you really touch upon inside the framework of finance. Talk us through just some examples of that, other than just your generic, so we understand that I guess the focus points for how you're going to translate into the real world.
Yeah, so the first thing we're launching is UPUSD and this earn and borrow product, which is meant to appeal. Again, if you look at the stable coins that are out there, they're basically looking to be incrementally better auditable equivalents of Tether, which is to say a safe harbor from crypto volatility inside the context of closed loop systems inside of crypto. Ours is an entirely different ambition. We're aimed at 2.5 billion holders of bank accounts, all of whom want cheaper credit, higher yield. To your earlier question, how we get the message out is a big challenge. But one would think if you're a Swiss citizen currently paying a bank for the privilege of holding your money, and there's a company or a group out there offering you 5% for that same money, you'd think you'd find it a compelling offering.
Well, let's talk about that, because that is a really big deal. So are you saying that in comparison to the traditional markets that are open now for the same sort of thing, you're a lot cheaper for those consumers? It's going to be much more financially beneficial for them if they made the switch?
Correct. I mean,
okay, so that's a big carrot. That's a big deal, because people are driven by money. They're not driven by blockchain. They're not driven by understanding the fundamentals. So that's something that can be easily sold.
Exactly. That's exactly the theory we're trying to put out there.
Okay, well, certainly the money will talk. If this is true, what you're saying, and you are going to be very competitive in this market, and you're decentralized, surely that's two boons for you, not one, because again, you're reforming how we do business, not just benefiting from the dollar value.
Sure. I mean, there's still some challenges in there, right? Which is to say that if it was a completely level playing field, and the ease of use and perceived security of this thing that our industry is trying to put forth were perceived as being the same as literally the stodgy old bank on the corner, then it would be a no-brainer. But there's clearly a little bit of a leap there, and a little bit of a challenge collectively for our industry to say, no, this is as secure as the bank on the corner. And in fact, the bank on the corner, it turns out, isn't that secure. It's just backed up by insurance, and taxpayers.
I think we worked that out in 2008, to be honest, Juan. I think the world is aware. So
That's
in this respect, let's talk about, again, the top-down pressures, because you're alluding to that. Have you ever had any feedback from the SEC or from any international jurisdictions, or even the centralized sentiment from those institutions who want to maintain their own position and power? Obviously, there'd be interesting dialogue happening in the background.
Yeah, it is interesting, and I think there's different regulators, and actually, I don't necessarily perceive that they all act as one. Some are rather forward-looking, and sort of get it, and others less so. I think at the end of the day, the one thing you can say about all regulators is that genuinely they want to stop bad actors and they want to protect consumers. And they do it to the best of their abilities. And some of them are far more sophisticated and forward-looking than others. So I can't really generalize to say that we've had the same experience with all regulators.
Right. But are you pro-regulation? And in fact, given on that point, are you confident that you're going to be supported by the regulators?
I think so, because I'd like to think that we're incredibly diligent about security, and we take very seriously the OFAC screening and the KYC and the AML. We understand that with the spotlight that's on this industry, if $1 of terrorist or narco or child pornography money were to cross any of our platforms, it would be a death sentence. So we really go out of our way to prevent that.
Right.
And
so you're quite rigorous with your management.
Yes.
And overseeing the entire just the transactional value and the processes in place. So let's talk about now the terms recoverability and heritability. You mentioned them before. Why are they fundamental terms for your ecosystem?
That falls into the sort of second category of the things we're trying to achieve, which is introducing conventional user safeguards. So again, it would be an assumed starting point for somebody having a bank account or having a stock brokerage account or what have you, that whatever it is that they're doing or possess would not be subject to the loss of a piece of data, meaning that it all goes away. It just doesn't function that way. And it wouldn't mean that if they were to perish unexpectedly because they got hit by a bus, that it would be out of the reach of their next of kin.
Right.
And so
that's pretty important, given what we've seen people go through. I remember reading an article where one gentleman had lost millions in the trash because he'd lost his computer. So it's a big deal that you can give people this insurance and this assurance.
Yeah, absolutely. And I think that without it, again, you're limiting the number of people that can speak to you.
Absolutely. Well, let's talk now about the vision, because obviously we could talk for hours about this project that you're bringing to the fore for the people. But what is the fundamental vision that you have as a team as you move forward in this next year? Like, really talk us through the roadmap in terms of the vision.
Sure. So the idea, again, sticks to the sort of mission of what do we do to grow the industry beyond 24 million users that know it today into mass adoption. We think that things like cheaper credit and higher yield are one vector. There are other vectors that are interesting. I think aggregating a breadth of financial content in one place that's never been assembled into one place, making that breadth of financial content accessible internationally. Because if we look at something like a Robinhood, which is pretty clever, it's US. If you look at something like a Revolut, it's Europe trying to expand into the US. I think the neat part about the view of the alliance is it starts out as truly global, right? And so if we're able to amass a breadth of content that is unique, that isn't resident in any one place, then we really have something terribly appealing.
Right.
If a teenager in India or China can access $5 of Apple stock on his mobile device again on a Saturday, you know, that's an amazing step function sort of an advancement. And I think if you look at it the other way around, if one is thinking of the U.S. securities market, all of a sudden expanding your reach, down into the bottom of the pyramid, into the billions of people who've never been able to tap this historic engine of wealth creation called the U.S. securities market.
Right.
That's a big deal. So it's really the democratization of access. That's where the future of crypto resides.
Right. It's about tokenizing financial assets as well. And because of these token representations, it really changes the game entirely for the majority who could never access this before, because of the hierarchical and top-down system that was in place for ever since we've known.
Yes, exactly.
Well, let's talk now about access, because for this to really work, people need to be engaging in it, needs to be on their phones or in their computers, be able to find it seamless, as you mentioned. But for that to happen, you need exchanges. So let's talk about when, who, what can you tell us with the plan for the future?
With respect to UPP's relationship with
right.
exchanges?
Exactly.
Yeah. So we're in discussion with a bunch of them. We would like, I think, one exchange or two to actually become an integral member. We're sort of deciding on whether that would be then repellent to other people coming on in a non-sort of founding member context. But it's clearly critical that every token that rolls off of this assembly line is born with exchange coverage and liquidity, because obviously that's the gating issue for the success of any given token. So it's a critical component to add.
Are the big guys talking to you?
Yeah, we're talking to a bunch of them, and it's a question of figuring out what the right commercial relationship is, the right balance. If you sign up, the biggest one of them, but that person doesn't want any of the other ones involved, is that better than maybe not making that kind of a preemptive deal? This is the debate at the moment.
Right. Well, it's really interesting because it sounds like everything you've been saying, you're very confident in the options you have all the way to the very top of the crypto sphere in terms of exchanges and beyond. Let's talk now about traditional sector for a moment. You well know that that kind of reciprocity and being able to engage with traditional marketplaces. From your experience, have you done a lot of work as a team to try and engage in the non-crypto sphere of business?
Yeah, sure. So in the context, and I'm speaking about Uphold, which is one of the constituents, we've acquired a broker dealer. We've been in the CMA process with FINRA. We filed a Form ATS with the SEC. I personally had worked in an investment bank for 10 years. So I think we're very familiar with the non-crypto, the securities space, as it were.
Right.
Yeah, absolutely. And I think some of that experience is, being brought to bear, both in terms of, shortcomings to improve on, and in terms of kind of baseline requirements that we know we're going to have to adhere to, irrespective of the content.
Right. Well, Juan, it's been a really interesting interview, and I would love to talk to you more. But for the sake of time and for brevity, which is not something I've managed well today, I want to thank you sincerely for allowing us to have the very first insight into what Universal Protocol is trying to do. You are trying to be that true interoperable, allow for interoperability to happen for finance, to be really engaged in this true decentralized frame and really challenge what's already been happening for millennia, and that is the opposite, where we have these institutions that dictate and determine the outcomes for those who really need to have more, and they are the consumers. So I thank you. You've addressed issues about your proxy assets. You've told us about the plan with regard to how you're going to roll this out with a very, very experienced team, and more to the point, the kind of partners you have are second to none. I have no doubt of that. And again, this is objective. It was unpaid. And I thank you very much for your time. Looking forward to hearing more about the common language as it unfolds and as you unfold into 2019. But thank you very much for letting us know about Universal Protocol today.
Well, Brad, thank you. And thank you for the very intelligent questions. And I hope we've been able to answer them in some kind of a way.
Well, it's just a start, mate, for you. I can sense that, and I'll be talking to you very soon. So thank you very much. This is Juan Thieriot. He is one of the core members of the Universal Protocol team, and we'll talk to you very soon. Thanks, mate.
Wonderful. Thanks, Brad.